We can see today the bullish movement or the bullish trading in the Dow created what we call a left-right combo. That's a doji followed by a bullish engulfing signal. When you add the analysis that this was a very strong price move, an indecisive pullback to the T-line, and now a very strong, one of the top ranked candlestick reversal signals, a left-right combo that usually implies there's going to be more upside, we can now analyze that we're probably in a J-hook pattern where wave 3 is going to be the same magnitude as wave 1. Yesterday, the NASDAQ did what we call our best friend signal, a doji followed by a gap up. And notice where it gapped up from and to. It gapped up above the, off the 50-day moving average through the T-line. Today, it used the T-line once more as support and traded positive. This implication is that with this best friend signal, there should be more upside. If it breaks out through this level, we know we're probably in another wave of this magnitude. When you add this analysis together, the candlestick investor has a much more clear graphic assessment of what's happening in investor sentiment. Notice today, they opened lower, but even though it traded flat at the end of the day, it was actually buying come in since the open. So this tells us the bulls are still there. This allows us to take advantage as a candlestick investor of the strongest pattern breakout, such as a wedge formation. We can see we had a bullish harami smack dab on the 50-day moving average, and the next day they gapped up out of the wedge, telling us there was a brand new investor sentiment in this stock, making the next strong price move. The same scenario can be applied to our recommendation on KEM that also had a doji gap up off the 50 through the T-line. That doji gap up was what you call your best friend because that's one of your most powerful reversal signals. And knowing that it opened positive again today after yesterday's profit taking late in the day told us the bulls are still there. This information right here is very strong evidence that the bulls have come in with great enthusiasm, taking us to our next potential target, which could be coming back up into this trend trajectory, taking you up into the $27 to $28 range. The advantage built into candlestick charts is that if you know that the market in general is in an uptrend and that all boats are going to rise in a rising tide, we can pick out the patterns based upon investor sentiment that's going to create very strong price moves. So if the old adage is you want to make hay while the sun shines, candlestick analysis allows you to make a lot more hay while the sun shines, knowing which patterns are going to work the strongest, especially when the market is moving in a direction and not creating any great selling sentiment. Knowing which patterns, like a J-hook pattern, is going to produce a very strong price move allows investors to take advantage not only of stock trades, but also option trades based upon the timing. The whole point of candlestick analysis is to analyze what happens in investor sentiment and what setups create the strongest reversals. That'll be it. We'll see you in the chat rooms.